Streaming link I'm circulating on the groups.
Yeah.
कितने साल के हो गए सर?
Okay. Anurag, are you there?
Yeah, I'm there. I'm just waiting for things to start.
We can start now.
Yeah. Good evening, our members, senior members, past chairmen, guests, speakers of the day. A very warm good evening to all of you. I'm sure we all are looking forward towards the long weekend, which is ahead of us. And we have done extremely well for all the businesses who have been filing their returns. Their due date was finally today. So I hope that everybody have submitted their tax returns in time and made the payment to stay compliant. As we all experience that since last 2 weeks, we are talking about some of the very critical segment. And in fact, last 1 month, we are experiencing a lot of new regulations, which is coming our way and which having a deadline effectively in this with respect to be it a data privacy in DIFC or a brand new regulation, which is a talk of town at the moment, ultimate beneficial ownership, which is cabinet decision number 58. So we thought it will be very interesting idea. It will be very interesting for all of members to understand what this regulation is all about and how it impacts our businesses. With respect to data privacy, there was quite a few seminars that the IFC has done. So we wanted to bring out the same thing for our members with our sponsor and partner, Clyde & Co. To talk about a little bit more in detail what the data privacy means to the businesses here in the UAE and how it gonna impact that entire thing. And similarly, apprehensions about beneficial ownership. Definitely speakers of the day today, we're gonna talk more insights in this particular matter and try to resolve a lot of doubts for our members to come. So I would like to place a special thanks to Mr. Mustafa Wajail to accept our invitation, Ben Smith and Mr. Ben Gibson from Clyde & Co. to accept our invite on short notice to come and share their views with respect to UBO and data privacy on today's session. Another key aspect which is we are going to talk about today is insurance for the business and the liabilities that going to come in. Insurance play a very important role in our businesses, and it's important for all of us to really understand what lies ahead and how we can protect and safeguard our liabilities, our assets, and with the insurance itself. So today, Mr. Mustafa is going to talk more about the insurance segment and how we can protect, ourselves from a lot of liability which is going to come in. A small note to all of you that we have sent a circular with respect to the gift, and I appreciate many of you have already taken. We have now around 1,500 responses from members. So thank you very much. Such a great response to a great initiative taken by the managing committee under the leadership of C. Anish Mehta. This is one of the initiative that we have taken, considering all our members. We all are staying at home and a little bit distant. So this is one of the gestures from the managing committee towards passing on our greetings to you ahead of the festivities. So 1,500, if you haven't done so, if you haven't get an opportunity to review that note, please do go in your email and try to check either in your main inbox or junk or spam folder, an email from the chairman, and fill that up. And we are very much eager to deliver our greetings to you at your sweet doorstep. And without much ado, I would like to ask our chairman, C. Anish Mehta, who is smiling pretty well ahead of his chairman's address. Over to you, C. Anish Mehta, Chairman, ICI Dubai Chapter.
Thank you, Anurag. And I think you are wrongly positioned in ICI Dubai. You should go for some fashion designing because every time you wear some different kind of attire. So, and we are always with the t-shirt and shirt. So we envy you. But anyways, so thank you. And just want to brief members on what Anurag said. Although there are 1,500 people who have filled the form, out of which 150 are someone who has filled the form twice. So we are still at 1,350. And our target is definitely to reach 2000 plus. So I request each and every member who have still not filled the Google form, please do fill that. This is a good opportunity to send some good wishes and smiles direct to your home. And thank you to all those who has filled the form. Before I start with the today's session's theme, I have one very amazing quote sent by one of the past chairmen, although it will not completely fit into the today's session, but it's a very wonderful quote and it's applicable to everyone. So I'll read it out. To be successful, you need family and friends. To be successful, you need family and friends. But to be very successful, you need enemies and competitors. So don't keep your enemies and competitors away. They will definitely give you more success if you try to overcome and if you beat them in your business. With this, thank you once again, everyone, for attending today's session. Today's seminar revolves around data. As you can see, for all the three topics, the data is the one thing which is a common factor. If you have seen the theme of the today's session, it's protecting yourself, your organizations, and the data. So the first, when we talk about yourself or your business, which means that we need to take care of ensuring certain things. We all are in the business of giving assurance, but the business needs insurance. So the uncertainty of loss may affect the mind of businessman or a professional adversely. So the insurance removes that uncertainty. It stimulates the businessman or professional to work hard, improving the efficiency. So it's a proven fact that business efficiency is increased with the insurance. Various aspects of insurance can be impacted, and as a prudent professional or businessman, it becomes your duty to be aware and make your stakeholders aware about safeguarding either assets, employees, including key management personnel, professional and other liabilities, and last but not the least, the new phenomena called cyber. We have with us today the pioneer in the industry, insurance industry, Mr. Mustafa Oliat Wazail, the founder and managing director of Gargas Insurance Services, who will brief us on various insights into the insurance industry and the various new products or new lines which has come into the insurance business. We welcome you, sir. The next topic, which is the talk of the town for last few weeks, I believe, the ultimate beneficiary ownership. We all know that there are various new laws are coming into effect, particularly to combat financial crime in the UAE. And particularly the UAE is well in advance, or they are the front runners in addressing this key observation which were there in UAE FATF mutual evaluation report. A positive anti-money laundering rating can have significant positive economic impact on the nation's credit rating and ability to attract foreign investments. So the new UAE cabinet decision number 58 of 2020, which is on the regulating the beneficial owner procedures. The objective of this regulation is to regulate the requirement of the corporate entities to maintain registers listing the UBOs, the partners or the shareholders of the company, and wherever applicable, nominee directors. To address these things, because there is a definition of UBO, however, there is much confusion when it comes to the local companies law regulation, where we have the combination of the expat and the local shareholders. So there is a distinction between the legal and the beneficial ownership. So today we have with us Mr. Ben Smith, the partner from Clyde & Co., who will provide insights into these new resolutions and hopefully some of the frequently arising questions. I will not say frequently asked questions, because people are asking the questions, but they are not getting the definite solutions. So today, Ben Smith will be providing us the solutions or the potential responses to that. The last, and obviously not the least, is the data privacy. Again, federal number of 2012 was there, which makes it illegal to disclose any information obtained by the electronic means if such information was obtained in an unauthorized manner. And recently, the DIFC also has come with the Data Protection Law number 5 of 2020, which was enacted on 21st May 2020 with an effective date of 1st July 2020. Surprisingly, our institute is also registered with DIFC, and we also have to abide with data privacy law. And that's why you would have seen that in some of the seminars where the external parties are involved, we are asking from you the permission to share the data. We are also undergoing through our data privacy rules also, which we'll put on the website very soon. And there will be some kind of declaration which will be asked from the members also, and they have to give that. To take us through the various insights of data privacy, we have Mr. Ben Gibson, again from Clyde & Co., a senior associate, to take us through this topic and enlighten us. So at the end, I welcome all our three eminent speakers, and I welcome all our members, ladies and gentlemen, our past chairmen, the sponsors, and the distinguished invited guests. Good evening and have a good learning session. Thank you. Over to you, Anurag.
Thank you, Chairman Sianish Mehta, for enlightening us on this. And members, one thing also we wanted to share with you that we are planning for a physical event in October itself, but considering the rise in numbers at the moment, so we thought probably once November the numbers are coming down a little bit, start coming down, we'll be trying to organize a physical event soon, probably towards the third week or fourth week of November. We're gonna see a physical event, the possibility of that. So we'll try to organize that, and we are also working at the same time on annual conference where we can see towards beginning of 2021. With this, I would like to ask our Vice Chairman C.S. Sundar Nurani, who's celebrating his birthday today, to introduce our first speaker of the day, Mr. Mustafa Vajail. Over to you, C.S. Sundar Nurani, Vice Chairman.
Thank you, Anurag. Good evening to all, and thank you all for wishing me on this birthday. And I'm very glad to introduce Mr. Mustafa. In fact, he doesn't need any introduction as such, because most of the people who are in the insurance and finance profession, they know him. But I mean, as a formality, I'm just reading out few lines. He is a fellow of the Chartered Insurance Institute, London. He is also the founder and managing director of Gargash Insurance Services LLC, which is our region's largest professional insurance intermediary. Mr. Mustafa has over 35 plus years exposure in management positions with leading multinational and national insurance companies. He is ranked 53rd by Forbes Middle East among top 100 business leaders in the UAE. Mr. Mustafa is often hailed for his strategic leadership. He was also Secretary General of the Insurance Business Group of the Dubai Chamber of Commerce. He was also board member of the Federal Body of Insurers, Emirates Insurance Association. He also has served previously in the board of Overseas Indian Economic Forum, was a member of the Program Advisory Committee of the Higher Colleges of Technology. He is also heavily involved in various philanthropic activities from those who are from the state of Kerala. Mr. Mustafa is nominated by the government of Kerala to the board of Norca Roots, an agency of the state government looking after the interest of Keralites globally and regionally. Recently, he is appointed to the position of Vice Chairman, Overseas Keralites Investment and Holding Company, Government of Kerala Venture. Please join me in welcoming Mr. Mustafa. Over to you, Mustafa, sir.
Thank you, Sundarji. Happy birthday to you. Mr. Anis, Anurag, rest of the office bearers of Institute of Chartered Accountants of India, distinguished fellow speakers, and dear members of, dear participants of the seminar. I'd like to thank you for giving me an opportunity to talk to you on a subject which is very, very current and which is what we are all going through. So I will now start sharing it with my screen. I'll share the screen, and then I would do the rest of the presentations from the side. So if you could bear with me. Is it visible?
Yes, sir. Visible.
Yes, sir.
All right. Okay. Now, I mean, it's a cliche to say that, okay, we are going through this or that, but this is historic, unprecedented, and perhaps, never in the life of global economy or world of nations did something like this create a scenario, a small virus which can't even be looked through normal eyes can hold the global economy in ransom for so many months. And we have still not seen the light at the end of the tunnel. This throws a lot of challenges to all businesses and individuals personally. From when challenges are thrown to the business, of course, as I think Mr. Anis said, insurance is the recourse generally, so far as possible. So here in my presentation, I will try to go through some of it. Ideally, what I would like to do is later answer questions. I'd rather keep those questions if somebody could be moderating it, or you can ask directly, but at the end of the session. Otherwise, we will be hijacked from the proper presentation. I may have already be answering some of your questions through my presentations. So I'd rather request you to bear with me till I finish this and do it. Now, restructuring the insurance program during a pandemic. We have the new, which is the old way of doing business is gone. The new business models, new risks and exposures, and we need to see how to optimize existing covers and where to seek solutions for the emerging dynamics of risks that the business world faces. Now, the questions that businesses need to ask itself is, have you undergone a change in your business process? I think most of us, 99.9% of us will say yes. Have some of your employees been relocated? I think in most cases. Are there any idle assets for you? Indeed. Will you achieve the estimated your estimates, your plan estimates, your budget estimates, your estimates you've given to insurers? Would you achieve them, or would you surpass them in some cases, in some rare cases, or will it be half of that? Does your insurance policy actually cover the risks that you face today? So what are these risks? Now, new models and risks. One of the things is unoccupancy, which is a huge scenario, lack of maintenance, and loss of revenue from the business model. Unoccupancy, that's more from a point of view of building owners and landowners and all that. Lack of maintenance. This is a very interesting. I would like to narrate a small incident which occurred about a month ago. There was a warranty in a policy about maintaining certain machinery, certain things every 3 months, certain inspections, certain services to be done, but it couldn't be done, or it was thought, okay, it was idle. A claim has occurred. Insurers are now falling under the warranty, saying that the service was not done. So these are the challenges which you need to talk to, which you need, whoever is helping you with your insurance needs to be aware of and helping you with. Lack of maintenance of your existing scenario, which can happen, and loss of revenue. We can address those things as we go. Then the other risk emerging is online, which I think most of the people addressed here. Cybercrime, because it is now working from home. It is more transactions, e-commerce, delivery risks, and new liabilities arising from all of that. Work from home is another issue. Yeah, asset location is just your laptop or whatever you're taking home, but when you have 100 employees taking 100 computers, 100 laptops to their homes, or if you're providing them new laptops, you have assets that are away from where your policy describes them to be located. Online crimes are on the increase. Then there is also, from a workforce point of view, the psychological issues. Then infection itself causing absenteeism, death, quarantine, in some cases, entire offices, because 1 or 2 guys were tested positive, entire offices had to be shut down. Was the business ready for it? Or did the business get impacted? Or what would you plan for the future? So risk category can be looked into as, for your assets, your employees, your cyber exposures, and your general liability resulting from all this. Restructuring employee benefits. Now, generally, most businesses will have workman's compensation policy. Please note that workman's compensation policy is a policy that covers only work-related injury and then resulting in death and or disability. So COVID is not part of that definition. So it is important that you are aware of it. Where am I? Sorry. So it is important. Now we are finding and we are advising our clients to buy group life insurance. Some of them also add personal accident into it. Group life would cover COVID-related situation. We're seeing a huge increase in demand for group life policies. And then group medical policies, most medical policies is mandated here now that you should get COVID related treatment. There are some policies have some sublimits. I would suggest the employers go through the HR departments, go through it with their insurers or their brokers and address this. There are certain organizations which may have policies given by their global, under their global schemes. Now, because UAE has mandated that COVID needs to be covered, those policies which are not mandated policies from UAE may or may not have this cover. It's important that that is checked. Assets. Again, this is very important that your assets are unoccupied. For example, certain policies require that premises are occupied. If you are unoccupied for more than 2 months or 30 days or whatever your policy condition says, if anything happens, if an event occurs, an insured event occurs on the premises, it may have an issue. So you need to be aware of it. You have a lot of idle assets. We have seen this very many things, especially with those who are dealing with equipments, large fleet, etc., which is lying down. Now there is an opportunity here in that you can, with your insurers, you can revisit those items which are idle and see how can you save on premium by way of reduced static risk cover. For example, if you have got 500 vehicles, rent a cars, which you are only leasing out maybe 100, 150, you don't need to have the full comprehensive insurance for it. You might just need a third party and fire and theft policy. So these are the things which you need to look at about your assets. Company assets could be employees working from home. So I've mentioned that earlier. How many of that is there? Does the policy include? It may not be very big amount in a laptop, maybe 4,000 dirhams, 3,000 dirhams, but multiply it, or maybe you're taking whatever. So you need to be aware of that risk. And your stock, because there is less trade happening, you see a stock piling up. Does the policy has a limit of maybe you have a 25 million stock declaration cover, maximum limit 25 million. Is this gone up to 30 million, 40 million? I don't know. That needs to be looked at. So they need to look at those things. You need to speak to insurance company or insurance broker to ascertain this. And there is opportunity for saving premiums there. The other thing is cyber. Again, these are subjects. Cyber liability itself is a subject on its own to discuss, but I'm just highlighting basic scenarios, online sales, work from home that could create cyber abuse and theft of data, all those things. You need to purchase an appropriate cyber policy, cyber liability, cyber insurance policy. You might be delivering goods now more and more. Do you need to see whether you have your public policy is extended to include delivery risks, and what are the kinds of risks you have? Then today, as D&O comes in, I think you have other speakers are talking about beneficial owners and other things. And this is a very interesting thing in the context of beneficial owners and others. D&O is a very, very important. Our own research shows that out of all the LLCs, less than 25% of them have got proper directors and officers liability cover, which is very worrying factor, because other non-practicing directors, because most of the time it will be practicing directors who will be liable. Non-executive directors could be having challenges with you on could hold the directors liable. So very important that D&O cover is done. Now I'll move on to my reassessing risk management. What we are saying is it's very important to have a BCP, business continuity plan. I hope all businesses have that. Quick technological transition, plan B. What is your technology transformation plan? I hope most of us have by now, because we are not talking at the beginning of the pandemic. We are now almost well into it. More than 6 months we are into it, 6-7 months. Yeah. So everybody would have adapted some way or something. Review it. Business interruption does not cover loss of profits due to pandemic. So you need to see what else can be done, how you can manage your business. This is something which you need to discuss with it. And one of the things which I was asked about, these cash flow challenges, insurers are now in certain medium and large risks willing to talk to you on installment premiums, agreed installment premiums, already happening in a bigger way on employee benefits, which is medical insurance. But other classes of insurance can also be structured that way. And then what's important from a business point of view is continue your risk improvement, especially because the static risk, it is not as much use. We have an eye on it. Identify new risk arising from new processes. It needs to be, you need to have somebody sitting with you, a risk manager or an insurance risk advisor to look at it. And document risks and have management plans for all risks. So this is very important from a risk reassessing and risk management point of view. Now I will go to my next slide, which is, just hold on. Available insurance for pandemic, which is now if you look at it, sorry. Yeah.
Yes, sir.
On COVID, you have mostly most of the basic risk emanating from pandemic is there. COVID is covered. Now the other areas, emerging scenarios are your cyber crimes, failure of risk control measurements, travel restrictions and exposures, and credit risk. Credit risk is also another major issue emerging out of this. Again, you need to recalibrate it. You should talk to insurers or insurance advisors and get a view of that. Are you seeing this, or are you seeing the screen?
We are seeing the thank you
The
screen.
last slide is
Last
there.
slide only seen, sir. Thank you slide. And now it has come. Now it is.
Okay, this is what I was talking about. Yeah. So I was talking about the risk emanating from the pandemic and risk calibrated by the pandemic. Yeah. So those are the things which are cyber crimes, failure of risk control mechanism, travel restrictions, exposures, and credit risk, as I said. So we have put, instead of buckets, we have put nice paper bags here, classifying risk into buckets. I would say
shopping festival.
I couldn't find buckets on the PowerPoint. So more than average stock is one challenge. Unoccupancy is another challenge. Loss of profits is a challenge. Failure of risk control is another challenge that businesses face. COVID-19 treatment cost, COVID-19 related death, employee mental health, international travel risks. Then you have cyber crimes, delivery risk, credit risk, and director's liability. We have covered this earlier, so I thought I will just go through this. Insurance availability, more than average stock. You just need to talk to insurers and do it. Unoccupancy, again, do the same thing. Loss of profits, unfortunately, there is no cover available because of loss of profits coming out of shutdown due to lockdown or COVID business scenario. Failure of risk control, this is something you need to internally assess. COVID-19 treatment, we have said everything is there. Employee mental health, now more and more insurers are willing to consider providing psychiatric treatment under their employee benefits insurance. So this is something which you may need to look at it. It is an exclusion generally, but that cover is available with more and more insurers now. Cybercrime, we have discussed. International travel, again, we have said this, very important. Some organizations, larger organizations, do have annual global travel policies. Very important that that is checked. And in those policies, sometimes you may not have the COVID cover. So it's important that policies are looked into and changed accordingly. Cyber crimes, we have said this. Delivery risk, you just need to review and inform. Credit risk, we have said. Credit insurance, we are seeing an uptake on credit insurance. Again, I've told you earlier about directors and officers' liability, which again is very important. So I think I'm going through the same thing that we have done, overseas travel, all that I have discussed. So I will rush through this. This presentation is available with the institute. So it's always, you can get it and you can get all the details. Again, cyber insurance directors, I have gone through the whole thing, but it is there again for you to use it if you want. And that is in a nutshell what I have to say. I would rather now talk to you on your Q&A or any clarifications if you may need.
Anyone has any question, please raise your hand.
Anurag Saab, I have one question. Mustafa Saab, in fact, this is from my wife, not from me. This is when it comes to medical policy, we have seen that our traditional medicine like Ayurvedic, these are not cleared by the insurance companies. So any thoughts? Because I mean, as you know, in fact, our Prime Minister is also promoting so many things which are traditional way of medicine. But I mean, having said that, these are not getting covered, especially in UAE. I'm not much aware of India. But having said that, most of our members, I believe probably they might be going to some kind of, Ayurvedic medicines also. We just want to hear from you if time permits.
See, if you have alternative medicines, as we call it in the medical insurance terms, they're called alternative. Anything other than allopathic is called alternative medicines. We have had clients who wanted it. And once we clarify what it is possible to, in certain situations, it's possible to get the covers included in the scheme.
Thank you, sir. So we need to separately negotiate for that.
You need to talk to your insurers or your insurance brokers for this.
Thank you, sir.
We have arranged it for a few people. It's not easy, but it is possible.
Thank you, sir.
And sir, one question that some of the member have asked about, how about the workman compensation? How critical it for businesses here? Although sometimes mandatory, it's not mandatory for businesses in all the cases, but how critical? I mean, what do you advise on the workman compensation?
You know, under the federal labor law, employer has certain liabilities under certain provisions of the law, labor law. And what Workmen's Compensation insurance policy does is it takes over that part of the compensation which is related to industrial injury, death, disability, etc., and even payment of wages following industrial injury, death. Such policies can also be extended on a 24-hour basis for including non-work related accidental injuries. So you can pay wages, you can pay for the medical expenses. It is not mandatory to have it, but it's available for employer and the cost is very low. But if it doesn't happen, then the employer is still liable under the law to pay for it. It's a transfer of risk primarily. And I haven't seen many, I would say almost 10 out of 10 of my clients do have workmen's compensation. They have much better policies. They have taken added group life policies into it. Employers are becoming more responsible. There may be a few who are not, but by and large, our experience is that most employers buy it.
Perfect. And so group life, how is it helpful for the businesses, your group life? Do you want to put some light to it, group life, a little bit more?
No, yeah. See, the whole thing is in a competitive world, today it may not be as competitive in the employment scenario. If one employer is looking after their employee better than the other employer, naturally your employee would go there, right? So it's supposing somebody is, okay, what has happened is, in some cases, most of the employers are generally generous. I wouldn't say all. And if an employee dies, they give some money from their pocket or whatever. It's not necessary. So in such scenarios, if there is a group life policy, it gives the employees a comfort level. And it motivates the employee, saying, oh, if I die, my company has a policy, my family might get 150,000 dirhams or 200,000 dirhams. That's a huge motivational factor in this thing. And from an employer's point of view, from pure HR policy point of view, it's a great thing. Yeah, and the cost is very minimal. Okay. So, yeah.
So one of our members.
Have I answered your question?
Yes, sir. You answered your question, sir. Thank you, sir. Yes, Chairman.
Sir, one of our members, Mr. Mohandas Balakrishnan, has a question. Mr. Mohandas.
Mustafa ji, I have a question to you. Before asking the question, I must say that it was very useful, your discussion. And, of late in Dubai, in UAE in general, we have the professional indemnity insurance, which is in vogue now. Since you have been in London for a long time, London and UK in general, it's a fashion to go for everything litigation, especially the work of auditors. But unfortunately, we don't have that kind of litigation against auditors in UAE. But still, do you have any experience of that sort, claiming any professional indemnity insurance from Gargash Insurance? If yes, what are things one should take into consideration to get such a claim? Could you please explain?
Yeah, you see, you're very right. This market is is not a litigious market at all, but this market is evolving. Now, about 20 years ago, one wouldn't even hear about any claims against hospitals and clinics and doctors. That's now huge. The claims are very large on med malpractice. Huge, runs into millions. You don't know, they don't get published. But we know we handle a lot of hospitals and clinics and all that. We know the extent of claims. So that's happening that side. We're also seeing even for lawyers, liability policies being picked up because they've been for wrong advice and look at this litigation. You know, when you talk about professional indemnity insurance is not about paying compensation itself, but even defense of a claim. That could cost an arm and a leg sometimes. A big amount is claimed. You need to go for litigation. You need to find the best possible lawyer. So your professional indemnity policy would cover your defense charges as well against this thing. So it's very important that every profession should look at. As I said, D&O was another case which I've highlighted earlier. These are the things as market evolves and develops, and one would need to have it. There is no other way. Every profession, including auditors. I mean, when you talk about auditors, I don't want to say, you know, we have heard the story of even the big fives being sued in various markets, right? So not maybe they were sued wrongly, but you know they were sued. So it is important that everybody and today, as we see more and more regulations coming into place and all that, your clients could say that you advised me wrongly. So you have an exposure there. Yes. I hope.
Thank you very much.
Yeah.
Amit, please ask your question, please.
Yeah. Good evening, Mustafa sir. I have a question regarding the credit insurance. I've heard that there are not many insurance companies here in UAE who provide these services.
True.
And the second question is, how efficient are these insurance companies, credit insurance companies, regarding the servicing the claims?
That's a very valid question. We have had a few claims which was serviced and paid. Now, credit insurance is a global product. Local insurers don't have the capacity or the technical expertise to handle credit insurance. So you have only a few global leaders, out of which 2 or 3 are operating here. So yes, it is a restricted market and cover is limited. But we do not have any adverse so far. There are only two claims that was paid under it. But we have never faced. I mean, there was only 2 or 3 claims made, but all the claims were settled. So we do not have any adverse comments on credit insurance.
Okay, so
Hemant has one.
Yes. Good evening, Mr. Mustafa. Okay, continuing on the Mohandas the professional indemnity insurance question. The best way, I think, for me to understand as a professional practitioner is how does Gargas Insurance manages its own professional indemnity insurance, and what is the specific thing you take care of?
Yes, very important. It's a very, very interesting thing. We have by law required to have professional indemnity insurance cover by law for us to get our license, but those limits are very small. If you look at those limits, they are when we look at the risk we handle and the limit that the license requires, it's very easy for us to buy it for 10,000 dirhams or 5,000, paying 5,000 dirhams. But we being risk managers, risk assessors, we have huge capacity. We layer it because we deal with tens of millions of dirhams of assets, and one person, somewhere we miss out something, we could be legally held liable. So we have huge cover as an organization. I will talk only my own organization, but I cannot say that about very smaller companies because they may not be able to afford those limits, but still they handle perhaps a 50 million or 100 million or 200 million client, which is which is not known unless something really bad happens. So that's an issue there.
No, the question is relevant because with so many like companies having formed in many free zones of management consultancy, professional advisors, and many advisors are there in this field. And now the clients are insisting upon professional indemnity cover without specifying the amount. So how does one decide?
You need to decide. This is what I said. Our own scenario was we needed only 3 million dirhams or 5 million dirhams of liability, 3 million dirhams under the law. But you need to assess. You need to speak to somebody, sit with them, understand your risk. You are the person who understands your risk much better than anybody else. But you can talk to some of us. We can talk to you and tell you what your exposures are, and then come to a more realistic limit that you might need to do. It all depends on the extent of advice, extent of exposure, or the financial implications you could have.
Okay.
Sir,
Anurag, thank you.
This right now.
Thank you, Mr.
Sir, just to follow up, what kind of professional indemnity can an insurance broker have? Because this is just acting as a mediator, right?
Yeah, you see, for example, you tell me you to increase your sum insured from 25 million to 35 million, right? I'll write to you saying that, yes, confirmed, I am writing to you. My guy down the road, my supervisor or my senior assistant, forget to advise the insurer and bind cover. And lo and behold, it is a fire occurs that night. There could be many, many instances, not just that. I just told you a simple example. So there could be many instances of such scenarios. Huge.
Thank you, sir.
Where insurance company is sued by someone for claiming it differently.
Come again?
I'm saying there can be an interesting instance where insurance company itself has advised incorrect and got sued.
There has been there's been cases
yeah.
of that. Insurance companies advising incorrectly and not giving the right advice. This is where you need, I'm not selling myself, I'm selling the professional insurance indemnity service. This is where you need indemnity service, professional indemnity service. At least you will have somebody that can guide you and somebody whom you can hold responsible. All right, thank you.
Anish,
Is that all? Is it all?
Yes,
Yeah.
sir. One more.
Rajiv, you have a question, right? From the member.
Yeah.
Thanks. There is one question which keeps cropping up from a lot of people. One is on the medical insurance. We see in UAE every year, whether we claim or we don't claim any insurance, the premium is going up again and again. That's first point. And the second thing is there are a lot of vitamins, or you can say mineral tablets and all, which are not covered. So this is being asked by Thakur on a specific on minerals, tablets and all. Yeah. And there is one more question which came before also. So I've mixed up both the questions, so you can answer both.
All right. Okay. See, this is one thing which we see every time, but you know, unfortunately, the figures are not right, especially if you're talking about two aspects. Suppose you're just buying for yourself and your family, and you don't have much claims. You're paid maybe 50,000 dirhams. Your claim was only 10,000 dirhams. As your age goes up, the premium goes up, irrespective of what, you know, the weather, and you could have, as your age goes beyond, it goes up, and there is complications. So insurers assess risk separately. But when you talk about group medical policies, it is based on the experience of the total group. Now, often that needs management. Very often, employers, just HR department does it. They don't tailor it. They don't monitor it. And then suddenly, the end of the year, the insurance company or the broker will come and say, by the way, your premium has to go up by 50%. Oh, what is this? So there is no constant regular review, update, or correction courses. So this is where you need help to do your things.
I'll ask one leading question on this. So what is the definition of group? So
What's the
let's say
definition of?
what is the definition of group? Example, we are an association of chartered accountants.
Yes,
It's a registered entity in DIFC.
yes.
And we call all members as part of a group.
You can call so long as you all are a group, because we have seen this, the question was asked. For example, I'm sure this, if it is made mandatory, not selective, for all members of chartered accountants groups to have a group life policy of say $500,000 each. It is possible for you to buy that.
We're not talking life. Let's talk about medical insurance.
Medical itself, but you won't be, because you will be working with various employers, various things. You can't be a group. That's the issue.
But
In
we are
medical insurance, you have to have your employer, because it's related to your employment scenario. Now, there could be a situation where I will come to you. It's very interesting. There may be smaller groups of chartered accountants. Yeah. Okay. Employing 10 people, 15 people, 20 people, smaller company. It is possible for us to work under ICAW, a scheme whereby you have now 10 companies with 200 people. Then you get the scale better.
So let's work on this plan. This is an open offer coming on the YouTube. We are recording also now. So we'll wait for a plan from you, because we have a lot of chartered accountant firms, which are smaller firms.
So you give us a contact number whom our guys should contact. They will be, we're all hungry for business. Don't worry. You will be getting a knock at your door.
Thank you very much.
But just want to deliberate one more thing, because the members of the ICI Dubai, they are not on the payroll or the employment of the association. So
True.
that can also be covered, or there
No,
has
you
to be
can
some
do
conflict.
if you Anisha, if you, for example, it is possible for you as a group to take. We are doing I'll tell you one thing. We are doing the KGMA, the Doctors Association. We are doing their group medical.
Okay.
We are doing KGMA group medical. So it's possible for us to create a scheme for you, especially under ICW. And definitely group life policies can be done. Medical insurance is challenging, but KCMA, these guys do that. All small clinics, doctors and all that, they are under that scheme. We are running that for the last 4 or 5 years. Doctors' own medical scheme we are running.
Interesting to know. Doctors also require medical insurance. So.
Yes, yes.
Sir, one question is there. I'll tell you, in last year, I was running out to most of the insurance companies here in the UAE with respect to the job loss insurance. So there was a need for this particular insurance to search. So I reach out to a lot of insurance. I mean, because all the insurance company here led by, within the CF fraternity, they're the CFOs. I reach out to most of them to find out a solution for the job insurance, a job loss insurance, basically.
Yeah.
And in fact, I went ahead a little bit more intense with one of the insurance company, but ultimately at the end, they come up with say that the premium is going to be very extraordinary and it's going to be very high. Is there something that you are aware of, something we can do for our members?
We are working on a scheme right now. Some other client has asked us for something. Leasing cars on a long-term basis, and guys losing jobs, and what can be done. We are exploring the market on this. It's a very restricted market, but we are working on, as you speak, because just so happened last week, my team was mentioning to me, we are working on this.
So loss of job insurance will be taken by the organization or by the members themselves? Or the one
can
who...
be now our scenario is for the employer will not give that cow. The employer will not buy it, but
And
for
they have to pay the premium.
the leasing company can do it. This used to be sold about 10 years ago by Oman Insurance for a while, but that it fizzled out. It didn't go through.
Because in current scenario, each insurance company will incur losses if he.
Yeah, exactly. So, I mean, it is so the premium will be very high. So that's the issue. Yeah.
And last question on my plate is with respect to a lot of our members also bought properties here, or probably they have bought the property under the mortgage.
Yes.
What is the remedy available to them? Let's say if somebody, God forbid, if somebody taken a loan and the person who taken the loan got into some challenge or difficulty, and let's say he lost his earning, or probably he's no more, the person who's taken the loan is no more because of, let's say, any situation. God forbid, nothing happens. But if something happens of that sort, is there any protection available to those people who have taken the loan, either personal?
If you have a mortgage on a property, you're also paying a premium to the bank for insurance of the property. So if something happens to you, death, only death, your premium is already paid. So the mortgage will be, the outstanding will be paid off by you're already being charged on it. Your outstanding will be paid off by the insurance, and you will get a mortgage-free asset back released to the heirs. That's the first thing. Yeah. Next thing is whether this can be linked to loss of jobs and other things. Some mortgaging banks provide that cover, others don't.
Okay, so members can pick and choose. They can talk to their banks, and they can really come up.
Exactly.
Is there something similar solution available for the personal loans as well, for people who have the personal loans, and if they wanted to cover any sort of uncertainty?
You see, okay, there are two things. One is, if it's a big loan, you can always buy a keyman insurance or something, life insurance. But most banks cover their credit. They have credit life insurance, and they cover their loans. And that premium is also charged to you. Very often they come to the heirs, or if you have a deposit there, they'll still take it away from you, but you can fight it and get it back. They're charging you already for the loan amount. And they have huge insurances for outstanding credits.
Okay.
Thank you.
Anurag, I have one question, and particularly asked by the person who has been person coordinating with Mr. Mustafa, one of our past chairman, Mahmood Bangara, and he has a question for you, sir. Can an insurance company deny their renewal in case of deteriorating health conditions? Any cap by law or practice for premium increase?
Now, if it is an individual scenario, you must remember all these policies are annual contracts. So the theory of offer and acceptance comes into play. So the insurer can deny to offer. There's no automatic scenario, but there is a moral scenario here. And this is wherein when you go directly to insurer, or when you go to a good professional insurance broker who could help you in such scenarios. But yes, offer and acceptance and insurance policies are annual contracts. So they are, if the insurer do not want to do it for some reason, it is they are in their right to deny renewal, unlike certain markets outside UAE, which will not allow that, but here it's possible.
Okay.
Thank you, sir. Thank you.
But then such things, talk to people like us. We should be able to sort it out for you.
Mr. Bangara, there's an advice for you.
Thank you, sir. Bangara
Thank you
sir,
so
we
much.
try. You open your video and we can see you after a long while. In the meantime, I would like to say thanks to Mr. Mustafa Wazail for such a great session. Thank you very much for enlightening us on such critical matters into the insurance, which is really helpful for businesses. Honestly speaking, many of our members and professionals within the fraternity itself need such products, and we are always in need and to to advise a lot of our clients as well with respect to insurance. So your advice will definitely will be very helpful to all of us, and we're definitely going to reach out on a personal conversation basis with respect to the group life, and we want to understand more about it so that we can come up with a product for all our members. So thank you very much. We really appreciate your.
I'll wait for one of you to contact me, and then we'll take it up from there.
Thank you, sir. Thank you very much.
Thank you so much. Thank you. Thank you. I must apologize. I would not be able to stay back, but I understand your next sessions are very interesting for me too. But is it possible for me to get a link into those things later?
Yes, sir.
It's on YouTube.
It's on the YouTube, so we'll send you the link of the YouTube.
I'll get the link from you. I'm sorry. My apologies to the other speakers for not staying back, but I had to leave.
I know you have to go, and that's why we presented you the certificate right now itself. So
thank you.
Thank you very much.
Thank you. Much appreciated.
Thank you, sir.
Thank you once again. Thank you.
Thank you, sir. So thank you, sir. And now it's time for one of the very important discussion, which is the ultimate beneficial ownership, the nuances and the understanding and the facts, and so much of doubts and confusions around this entire subject, which will be taken by Mr. Ben Smith, the partner Clyde & Co. And to introduce our speaker, we would like to ask our treasurer, C. Harikishan Rankawat, to do the honor, please. Over to you, C. Harikishan Rankawat, treasurer, ICI Dubai chapter.
Thank you, Anurag. Respected members and guest speakers, good evening. It's my pleasure to introduce Mr. Ben Smith, who's currently working as partner of Clyde & Co., one of the very reputed law firm in Dubai. And for your information, Clyde & Co. is our platinum sponsors as well. Ben is a corporate and commercial lawyer and has been practicing in Dubai since 2008. Ben's clients operate in many sectors, including automotive, oil and gas, technology, media, pharmaceutical, retail, FMCG, and hospitality. He has been appointed to advise administrators, liquidators on Middle East restructuring projects. Ben has been on secondment with a number of clients in the past. He is a regular commentator on developments in the UAE legal market. He is ranked by Chambers Global as a leading lawyer for corporate, commercial, and commercial contracts work, and by Legal 500 as a next generation partner for corporate, commercial, and M&A. He is recognized as an independently rated lawyer in Acritas Star. I just Googled about what is Acritas Star and found that Acritas has a database of over 10,000 client nominated standout lawyers in private practice. Typically, in any of the law firm, 5% of the partners are Acritas Stars. So we are very lucky today to have Ben Smith amongst us to speak on the complex subject of UBO. Now I welcome Mr. Ben Smith to share his expert views on the newly enacted UAE Cabinet Decision number 58 of 2020 pertaining to ultimate beneficial honor. Over to you, Mr. Ben.
Thank you very much. Hello, everybody. It's a pleasure to be here this evening. I have some slides which I'll share, but perhaps before I do, I just thought I'd echo some of the remarks that Anish made at the opening of the session when he talked about the introduction of this new regulation and how it really is another step forward in the FATF compliance, AML compliance movement that we've seen really quite actively in the last 18 months or so in the UAE, including perhaps most recently with the economic substance regulations, with which I suspect many people on this call are already familiar. The regulatory and compliance landscape in the UAE continues to get more complicated, and the burden that is placed on companies and those people within companies that have to ensure compliance is definitely increasing, to the extent that it becomes quite difficult, even in private practice as a lawyer, for example, to keep on top of the pace of change and the amount of regulations coming out and what they mean for our clients. So it must be, I can only imagine how difficult it must be for businesses themselves who are, to keep on top of these developments as well. So I'll just share my slides if you just bear with me a moment. There we go. Yeah, so the new cabinet decision effectively requires companies to maintain and submit two registers. One is a register of real beneficiaries. That's how we've translated from the Arabic as opposed to UBO, ultimate beneficial owner. But I think we can use the term interchangeably for the purposes of the session. And a register of partners.
Sorry to interrupt you. If you can put in the slide mode.
Oh, sorry, has it not?
Yeah. Maybe you're using two systems.
Is that working now?
No.
Okay. Let me try. Is that any better?
No, it's gone completely.
Single line we can see. Just
I think like your slide is having quite a few both the side edges. So you continue with the old one, whatever you were having. Just
the initial one was at least good.
Yeah. Maybe you can remove and share again.
Yeah.
Now it's better.
You can just increase the size and that will do. Yeah, this is fine.
that is okay. Yeah, you can go ahead.
Yes.
Okay, I am sorry. It seems okay on my screen, but I'm sorry if it's not coming through. Let's go back to us. Yeah. So the requirement to maintain these two registers applies from yesterday on my reading of the law. Although I have seen some commentary saying that the compliance date is the 31st of October. But my interpretation is that it's the 27th. So by the 27th of October, by yesterday, all companies in the UAE, except for a couple of exceptions, which will come on in a moment, are supposed to have in place these two registers. And they're also supposed to have submitted the two registers to the competent licensing authority that oversees them. So for example, in Dubai, onshore, that would be the DED, or in Jebel Ali Free Zone, that would be the Jebel Ali Free Zone Authority, for example. From a practical perspective, as far as I'm aware, there's not yet actually a procedure for submitting these registers. I have heard of one free zone which has requested its licensees to submit them by email. There may be others, but I'm only aware of one. So I think the practical takeaway for those on the call is you should have these registers in place and take a watching brief to see when you will be requested to submit them, and to make sure that you're submitting them when that becomes possible and that a formal process is in place. All companies in the UAE are subject to this requirement, with the exception of those that are wholly owned by the federal government and companies in the financial free zones, which is DIFC, Dubai International Financial Centre, and ADGM, Abu Dhabi Global Markets. I think one of the key things with the regulation is identifying who is a real beneficiary. And that needs to be an individual person. So I will talk about that in the next slides. Anurag very kindly shared some of the questions which I understand have been asked by people in the audience. So I've actually tried to put some worked examples to talk through some of the points that came out from the questions that Anurag shared with me. So we'll work through those as well, perhaps, over the course of the session. So the register of partners, that one is relatively straight. Excuse me. Register of partners, that one's relatively straightforward in terms of really we're just looking to identify who are the shareholders in the company in question. If you have a branch of a foreign company, you don't need to maintain a register of partners. So this is only for companies that are incorporated here, where you have to have a register of partners. The register of partners will clearly be every shareholder or every partner in the company. Interestingly, if you're a nominee director, you also have to be listed in the register of partners. And where there's trust structures in place, it's also necessary to disclose some information about the trustees of those trusts, but that can get a little bit complex. So and it's relatively less common. So as a direct shareholder in UA companies, so I won't focus on that in this session today. The register of real beneficiaries is a little bit more challenging to work through. Identifying who is a real beneficiary very much depends on the specific structure of the client. So not just how the individual company is owned and what its corporate structure is, but actually how that is managed. It's not just about ownership, it's about control. So the threshold here is individuals. So it's a real beneficiary is not a company, it's an individual, a physical person who directly or indirectly owns or controls 25% of the shares or voting rights in the company. So that could be any one of the people listed on the bullets on that slide, for example. But the one of the challenges from the companies that I'm speaking to about this development is identifying who are the real beneficiaries in their organization, because as many businesses, ownership structures aren't quite so straightforward to identify this immediately. If it's not possible to identify a real beneficiary under that 25% threshold test, the next option is the physical person who controls the company. And if that test isn't possible to identify, you look at who is in charge of the senior management of the company. So the first test, if you like, is the 25% threshold, individuals, and then you've got the two other thresholds, which are fallbacks, where you can't identify somebody in that position. There are sanctions for failing to comply, and the authorities have got the power to impose those sanctions, but the details of them are not yet available. So I thought what I'd do now perhaps is just work through a couple of examples. I've put on the screen, hopefully you can see the slide, but basically the structure here is where you've got a Dubai LLC, 49% owned by India Co. So I'm assuming this is a company incorporated in India. And India Co. is owned by Mr. A and Mrs. B. And then you've got another, on the other side, you've got 51% of the Dubai LLC owned by UA National Company. And 25% of that is owned by Mr. C, and 75% is owned by Mrs. D. So in this scenario, given the number of people on the call, I won't ask for people to volunteer the answers because I think it could get a bit unwieldy. But in this scenario, in the register of partners, we'd be looking at who are the shareholders in Dubai LLC. So that is India Co. and UA National LLC. That would be who you'd list in the register of partners, register of shareholders. Identifying who the real beneficiary is perhaps a little bit more complicated. So let's assume for now that this is a genuine 49-51% joint venture between India Co. and UA National LLC. So this isn't an arrangement whereby the UA National, where the India Co. is actually taking 100% of the economic benefit and has structured arrangements with the national. This is a genuine joint venture. So in this case, we have to work up through to the 25% threshold. So who meets that? Mrs. B, it's the people in red. So Mrs. B meets it because she owns 75% of India Co., which owns 49%. So that's indirectly above 25%, as do Mr. C and Mrs. D. If this wasn't a genuine joint venture in a true economic sense of the arrangements, and actually the UA National LLC was taking a fee effectively from the Dubai LLC, and the management was structured in a compliant way such that the India Co. was managing and controlling the business, it becomes a little bit more difficult because from a control perspective, you could argue that India Co. has 100% of the control, but not UA National LLC. My view, in the absence of further clarity on this is, given the wording of the regulation, I would err on the side of caution, and I would disclose the same UBOs under that structure, the same real beneficiaries, as I would if it was a genuine joint venture. Because there are different sections of the law that you can interpret in different ways around whether or not you need to identify Mr. C and Mrs. D. But so I would err on the side of caution, and I would disclose all of them in the real beneficiaries register. So I give another example here. So this is a Dubai LLC, which is owned 49% by Indiaco PLC. So by PLC, I'm meaning this is a public listed company on the Indian, on a recognized exchange in India. 51% owned by the same UAE national, with Mr. C and Mrs. D at the top. Under the cabinet decision, where one of the real beneficiaries is a public company, there's effectively an exemption from having to identify who are the shareholders behind that public company. So in this case, again, for completeness, I would be inclined to put the name of the Indiaco PLC in the register of real beneficiaries, but to make a remark next to that because it is a PLC, you're relying on the exemption in the regulations. That means you don't need to disclose the you don't need to go through to the next level to identify the details of the individuals. And then similarly, for the same reasons we discussed in the previous slide, Mr. C and Mrs. D each cross the 25% threshold. In this example here, third and the final example, it's a Dubai free zone company, and there are 5 shareholders. Each one has 20%. So from a register of partners perspective, the shareholders are Mr. A, Mrs. B, Mr. C, Mrs. D, and Mr. E. That's clearly the case. But from a real beneficiaries perspective, nobody meets the 25% threshold in this example. However, I've put a remark at the bottom saying that Mr. A is the sole director and manager of the company. So relying on those fallbacks that we talked about earlier, where you don't meet the 25%, you then go to look at who is controlling the company as a local level. I would disclose Mr. A in the register of real beneficiaries. I appreciate that's gone through things rather quickly, but those examples I think reflect the scenarios that Anurag had very kindly shared with me. So I'll pause there and ask if I can take any questions. Unfortunately, I can't actually see how I stop sharing my screen right now because it's gone a bit strange, but I will try and work out how to do that now.
It's removed.
Okay,
so
perfect.
To put together so much insight, and in that short span of time, you address the thing pretty clearly. So I think, like many of us always understand the situation that this 4951 is going to be real challenging. But you rightly said that it's better to put together all the people in the shareholders register and take the right perspective, because in absence of absolute clarity, it really makes sense that we should go by the law definition. And we have quite a few questions from our members, so I'm gonna go and unmute CA Muralidhar. Over to you, CA Muralidhar.
I think Mr. Muralidhar
is gone. I cannot see that.
Mr. Muralidhar Mokapati, are you there? Else take Mr. Hemant Mundra.
Okay, Mr. Hemant, you go over there.
Okay, good evening, Ben. Like you differentiated between the genuine joint venture and the arrangement which is prevalent in Dubai. And to be on the safer side, you want to include both the partners or both the shareholders in the real beneficial owner. But like in the VAT regulation, there is a clear-cut provision that if there is any other agreement to the contrary, the 49% will be the de facto 100% owner. So will that not be a good basis to include only the 49% and not the 51% to be on the safer side and remove that?
Yes, I think that is that. I mean, that's certainly one way of looking at it. To my mind, does that give you the confidence to proceed on that basis alone? So I'm taking quite a conservative view, I think, when I'm saying that in the absence of the further clarity in the regulations, my inclination would be to fully make the disclosure as I described it. I mean, I can certainly see that interpretation, but there's no express link, I don't believe, off the top of my head, in the regulations that directly, brings in the VAT provisions that you're talking about into the scope of how you analyze who the real beneficiary will be for the purpose of this regulations. So that's why I'm taking my preference has been to take the more cautious approach of making creating the registers as fully as possible. And you can make remarks in the registers to document the fact that the arrangements are structured as they are as well. So you can note in the register that you maintain what the position is with any protective arrangements. I think another thing to mention on this is that it is very possible that there will be template registers, standard form documents which you'll be asked to submit. It might be done in an online way. In the coming months, I suspect there will be more clarity around some of these points, and so the position may change. It's just my reading of the regulations is such that I would include the partners in the 51%.
Just to add on to that question, so far the court has been taking cognizance of the side agreement in any kind of dispute. But if you put the real beneficial owner considering this safer view, will the court not take into account that you yourself are declaring as the real beneficial owner, then the side agreement is not valid, so pay the profit distribution to the so-called owner also, who are not actually owners?
Yeah, I think that's why I would do it with a remark in your register to make it clear as to why you've put that, why you've made that entry in the register.
Okay.
But that is always the case, that is always the case, because you cannot just go and simply go code of law. This mentioning, I believe the mentioning of the people into the shareholder register will not make much of the difference, because generally people have the side agreement, and side agreement does not have any standing in the code of law and other spaces. So that is still a risk that continues. So just mentioning people in the shareholder register will not make much of the difference.
I think the shareholder register is one thing, because the shareholder register is just a statement of fact. Who owns the shares? It would be clear 4951. In the real beneficiary one, what I think, Anurag, you made there's a couple of really important points there, because firstly is the enforceability of these arrangements, which is a whole. We could have a 2-hour session just talking about that. But I think another key point is how the arrangements are structured, because it is possible to structure the arrangements in a way that they are robust and are enforceable. But it is also possible and common for the arrangements to be structured in a way that is not strictly compliant. And I've seen many examples of that. So that's going back to one of the things you said right at the beginning, it really depends on each individual company how you're going to make this assessment, because a company which just has, say, an arrangement with the UAE national where they pay them X thousand dirhams a year, and then there's sort of a handshake or a gentleman's agreement effectively between them that the foreign company is going to take the profit out of that business. That arrangement may not be compliant, and even though the 49% shareholder may consider that it's their company and they control it, legally actually they may well not do. If they on the other hand, if they have a really robust structure which is really carefully thought through and structured properly, you'd have possibly a different analysis.
That makes sense. And in most of the times, we also come across a lot of businesses like that, and people just believe that one single sort of document that it's good, but we often advise people to take legal opinion in that relation, all the businesses. So you brought the point right, and we discussed. Now we have another question from
like Anurag, just one thing to add. Earlier the arrangement was 1-to-1. Now the Amir Center, Tahsil Center are taking care of this sponsorship arrangement. So the scenario is entirely different, because as a company owner, I may not even knowing or met physically the sponsor. Earlier I used to meet the sponsor and arrange the fees. So it's likely getting complicated.
Yeah, but Mr. Mundra, that's why the companies, you should approach companies like Clyde & Co. Mr. Vivek Batra, please.
Thank you.
Shameless plug.
Mr. Vivek, you have to unmute yourself. Yes, go ahead now. We are not able to hear. Your system mic is also muted.
Okay, by the time Mr. Vivek Batra comes back, so then I can ask a question here. When I echo your view on what you said previously, if there is no arrangement, there is no structured arrangement, then the UBO or the real beneficial owner will be the same who is mentioned as shareholder. I'll take an opportunity to share the screen. I think this is where some of the questions will come. If I've created a structure through a holding, and in the holding, I have taken the back 51% or shareholding also. So who should be reported as a UBO in this case?
Yeah. So this was the scenario which I was talking about earlier. So I would err on the side of caution in this. I'd have a register of partners is clear. It's the foreign national and the UAE national. The register of real beneficiaries, it becomes more difficult, and you can read the law in different ways. But my view on this would be that in the register, you would name the individuals that sit above the holding company. So in your diagram on the screen here, you've got the holding company who have a 25%, cross the 25% threshold from a management or control perspective. Plus, I would also name the UAE national with a remark in my register as to the fact that you've got arrangements in place, but that there is an ownership link above the 25% threshold, and that's why you've included it for completeness.
And one leading question here, will we call it still a LLC? Because the 50% is completely compromised here.
Pardon, sorry, I didn't catch the question.
Will we call still this company as a limited liability company or a mainland company where UAE national is mandatory to hold 51%? Because the 51% is completely diluted through the holding structure.
Sorry, what's the question though?
So, okay, then in this case, if you see the holding is being structured in such a way that it is being nominated the 51% share back to the foreign national.
Yeah.
So ideally speaking, the UAE national does not hold even 51% because he has already nominated his shares. Will the LLC structure does not get challenged with this UBO?
I think Ben has already answered earlier that you can have various arrangements, but the enforceability has to be seen depending on the structure, what structure you have entered.
Yeah, and this enforceability is there because I have created a nominee structure and shares are already nominated.
No, but from the commercial companies law also perspective you have to see. So I think this is a case for the complete opinion taking.
So we are taking views on the session. So
I think one thing as well, Mr. Here, is, however you have your structure with your nominee arrangements, the shares are still owned by the UAE national from a UAE law perspective. Yeah. So whether you have arrangements in place that are comprehensive, or not, the shares are still owned by the UAE national. And there is an article in the cabinet decision which talks about determining a real beneficiary, and it clearly mentions ownership as well as control. So that's why, and it's because of that I think you can't just view it on a control measure alone. And then the safest course is to view it on an ownership measure as well as control measure, is my interpretation, pending any further clarity which we might receive, in the future.
I appreciate that. Just a closing comment. We have seen in one of the healthcare large company where the nominee of shares is the biggest story which has come up in the market. So I'm connecting with all those dots and looks like the LLC structure itself gets challenged. So that's it. Mr. Batra, if your speaker is on, you can come back on the.
Okay. Unmute yourself, Vivek. I think it's still not going. You can type in your question and we'll read it actually. You can type in your question and we can.
Type in already question. Let me read his question.
Yeah, please go ahead.
He is asking, how do you determine UBO if the shareholder of the ultimate parent is a private equity firm?
I mean, so I think the methodology would be the same methodology that we've talked through. So you need to look through the ownership in, you need to look through the private equity firm. Are there, again, it depends on, what is that private equity business? How is it structured? Is there anybody which crosses the 25% ownership or control threshold in the private equity firm? It might be that the private equity, depending on the structure, but if the private equity investment is coming from a company which is incorporated with multiple shareholders, for example, it might be that there's nobody above the 25% threshold on the private equity side. In which case, it then you wouldn't have, unless there was anybody with control at 25%, you would go back to the second and third tests we talked about, where you can't identify somebody on the first test, which is looking at who is exercising control of the company or control of the management of the company in question.
Okay, thank you. Now we have a question from Mr. Mohanlal Balakrishnan. Sir, go ahead, please. I have unmuted you.
Hello,
right.
Ben, I have a quick question.
Yeah.
The word substance is gaining more and more dominance now, and an owner of a company, a real owner of a company, cannot run away from the responsibilities of business transactions anymore. So, many people, they were hiding their identity somehow, whether it is in BVI companies or somewhere, maybe even though it was many companies, it was publicly listed, the real owner's identity was not available. But having introduced both ESR and now UBO, which is also part of it, do you think that it will have a direct bearing on the money laundering, or do you think that any substantial check on money laundering will be happening? Thank you.
Again, I think there is a whole host of new regulations and evolving regulations that's based around anti-money laundering. So I think that for sure the environment is getting more robust with respect to the restrictions and the checks that are in place in that respect. Also, you mentioned secrecy. I mean, there is a clear trend of legislation around the world, not just in the UAE, moving away from secrecy in corporate structures and hiding ownership and things. I think it seems to me that if business owners and things, the prudent thing, if you've got, hopefully you don't have anything to hide, but I think it's about being, understanding that in the way that regulatory developments are moving, the expectation, I think, is probably one that you do have to disclose cards relatively openly about all of your ownership structure, and you see this coming from lots of different angles. We're talking about these regulations here, the pressure on banks in terms of the KYC that they're doing. There's a whole host of different aspects to how this is developing. I mean, on the ESR, as you mentioned, the ESR is of course largely driven by kind of a tax analysis, but there's an ability for information to be shared with tax authorities. The new real beneficiary cabinet decision that we're talking about today, that contains provisions about secrecy, which is reassuring. So it effectively says, when you submit this information, it will be treated confidentially. But there are some circumstances when it doesn't have to be treated confidentially. And that includes where it needs to be disclosed to other regulators, possibly in other jurisdictions. So if there was a question over, somebody's tax affairs or other affairs in India or another jurisdiction, I think you could, it's certainly within the scope of these regulations that the information you're providing to the UAE government could then be released to that regulatory authority.
Thank you very much.
Thank you very much.
Thank you very much. Really appreciate the entire session. And I would like to say one thing, that this is a growing subject and growing topic, and what we have experienced until now from an authorities perspective, from regulators perspective, that themselves are making themselves familiarized with the concepts and how it is going to impact, because the law comes, then people understand the challenges that what we have wrote in the law, and then practical questions comes, and then authorities start answering the question and they accepting things. So thank you very much, Mr. Ben Smith, for taking so many questions and sharing your insight on the very new UBO regulations. We really appreciate your time and answering the question. I will share. I hope you'll stay in the session a little longer, right?
Yes, I will. I'll be here. Yeah.
Perfect.
So we'll present you the certificate of appreciation a little later.
That's very kind of you. Thank you so much.
Now I would like to ask, it's time for the data privacy, and to do the honor and to introduce our next speaker, Mr. Ben Gibson, I would like to ask our executive committee member, CA Jai Prakash Agrawal, to introduce our next speaker. Over to you, Jai.
Thank you, Anurag. I mean, your energy seems down. Maybe weekend has already kicked off for you. So we have reached the last session. UBO is interesting. It's like a hotcake which is selling right now. And now we have reached to data, which is also important. And we need to know about data privacy. My video is available?
No, it's not.
And you're not enjoying it when my video is not there, right? That is the difference between data secrecy and data privacy. Data secrecy, I'm not sharing my video. You are not enjoying it, right? I have to share my my video, then you're enjoying it. That is data secrecy. Data privacy is sharing with the right audience. It should not go in the wrong hand so that it's not getting exploited. That is data privacy. We will know more about it. And to know more about it, we have Mr. Ben Gibson with us. He's a senior associate Clyde & Company who handles commercial technology law with particular focus on IT outsourcing, cross-border and domestic, SaaS, licensing, data protection, emerging technologies. He is also recognized as Legal 500 as an emerging talent in IT legal market. From his experience, client has benefited across both UAE and UK. He has handled complex global outsourcing agreements, multi-tower service procurement, SaaS agreements, software licensing. He is highly experienced in advising clients in relation to global data protection, risk compliance. His clients include both public sector and private sector entities, and he has significantly experience in financial services, energy, and healthcare sector. Mr. Ben Gibson, we bring you to the platform. Please guide us on why that data privacy is important and what we need to do. Mr. Ben Gibson, sir, where are you?
Thank you. Hi, I'm here. Thank you so much, Jai Prakash. I can't see my video on my screen, but I have switched it on, so hopefully everyone can see me. I think that's the first time someone has read my web profile out loud to me, and it sounds much better when someone reads it out than when you're writing it yourself. But thank you for that. Good evening, everyone, and happy birthday to Mr. Vice President.
I'm sorry, Mr. Ben, I'm not able to see you. He's not on the screen. He's more on data secrecy than data privacy. We want him data privacy part of it.
Yeah, I don't know why my video is it's gone off. Let me turn it on again.
Yeah.
Is it working now?
Ben is taking it practically.
I think
it's data secrecy, right? Okay.
It's turned on, but anyway, we'll launch a slideshow shortly anyway. So hopefully the screen share works. I don't know why my camera's not working. I'm sorry, but as long as you can hear me, that's the main thing.
Your camera. I think your camera is rear at the moment. That's why probably it's not there.
Yeah. So, okay. Well, let's launch the slideshow.
Yeah.
Let's hope that this works.
People can see the circular too if he wants to see Mr. Ben Gibson.
Okay. Here we go. Okay. Is that working?
Yeah, that's all right.
Great, excellent. Okay, well, that's the main thing. That's more important than my face, anyway. Okay, so yeah, thank you again. It's a pleasure to be here. I appreciate it's getting late, and what this talk is intended to do is to really provide some background and some overview in relation to the current data protection landscape in the UAE, and we'll have a brief look as well at the broader Middle East, just for some context. What we don't have time to do in 20 or 30 minutes is to do a deep dive into, for example, the new DIFC data protection law. It's a complicated law. There are lots of different parts to it. And, you know, firstly, I might send you to sleep if I tried to do that, but secondly, it would take an awfully long time. There are a number of resources that the DIFC Commissioner of Data Protection has published on their website, so I'd urge people to look at that. We also have articles and insights on our website, and if the demand is there amongst the group, I'd be happy to do a more focused session on the DIFC law at some point in the future, if that would be useful. I'm conscious that within the group, I expect we have practitioners who are based in the DIFC, but also onshore. So I'm going to try and keep this as relevant to everyone as I can. So you can see the agenda there. We'll discuss briefly what data protection is. We'll look at the landscape in the Middle East, the kind of patchwork that we've got in the UAE, and then some potential future developments, and then we've got time for some Q&A at the end. So what is data protection? Well, in a nutshell, data protection laws are laws which govern how a legal entity collects, handles, and shares personal data. Distinct to, say, a confidentiality obligation, which would cover all sorts of business information that's confidential, what data protection laws are really trying to protect are the rights of individual persons. So you see the phrase natural persons to distinguish human beings from legal entities in the context of data protection laws. Data protection laws don't apply to all sorts of uses of personal data, so there are some exemptions. So purely household or domestic activities are not covered. So, you know, your children can't accuse you of breaching their data protection rights if they're unhappy with your use of their personal data. Law enforcement agencies are usually exempt for obvious reasons. They need to be able to use information covertly, for example, and the same with national security agencies, and to gather information on people without them knowing in certain circumstances. Certain public interest activities are exempted. Legally privileged information, for example, would be exempted from the scope of rights of access that individuals might have under the law. And there are other exemptions as well. But in general, if you're operating in a jurisdiction that has a data protection law, and you're any kind of normal commercial organization, which would obviously include accountancy firms and other professional services, then you will need to comply with the law. So what do we mean when we talk about personal data? I've put some definitions from various data protection laws on the slide to illustrate that although some of the definitions are slightly different, the approach is usually the same, and it's usually a very broad definition. So we're looking much wider than just identification, documentation, name, contact detail, address. You could be talking about, for example, an IP address, which could link an individual to a computer or to particular online activity. It could be a thermal image. So nowadays, when we go into a mall or an office building, perhaps, because of the COVID situation, we're accustomed to being scanned by a thermal imaging camera. That's capturing personal data. If those images can identify the individual who's entering the building. A voice recording is personal data. Location data that your mobile phone generates, that's personal data. So it's really any bit of information which can be used to identify a living individual, either alone or when it's combined with other information. So I thought we'd play a quick game. There's a serious point at the end of it, but hopefully just to make sure the energy levels are still up at this time in the evening. So I'm going to reveal some information about a person point by point. If anyone thinks they know who it is, feel free to shout out. I don't know how well this will work because I'm sharing my screen. I can't see the comments section, so I don't know. I was going to suggest people write it in the comments, but that might not work. But unmute yourself and feel free to shout out if you know who we're talking about. And then there's a more serious point at the end. Okay, so my father was a lawyer. Well, that doesn't help much. Lots of people that could be. I have an older brother and sister. Again, probably no one knows yet. I was born in New Delhi, 5th of November, 1988. I'm 5'9" tall. I think Anish might know. I'm not sure how he can know from that. There's a bigger clue coming up, perhaps. My first professional overseas work was in Sri Lanka when I was just 19. So someone who's got a job that might have caused them to have to travel to Sri Lanka. An even bigger clue coming up. Test match economy rate is only 2.88. But I've never taken a wicket. My test batting average is 53.63. Someone must know who this is now. Go on, Anish.
Oh my God. What a quiz. Somebody saying Virat Kohli.
Yes, that's right.
Oh, Sunil Kumar Lakhani ji. Well done.
Okay, you win the prize. Well done. So it's Mr. Virat Kohli. But the serious point here is that that third bullet point alone is for 99.9% of the population. That doesn't tell you anything about who we're talking about. If all you had was the date of birth, you wouldn't know who we're talking about. But if you had the date of birth and you also happen to have a list of the birth dates of the India cricket team, then that would probably identify with 100% accuracy that we're talking about Virat Kohli. The same if you had, if you had the India cricket team bowling figures, you would know we're talking about Virat Kohli. But without that second database to cross-reference to, actually, there could be several players with that economy rate. There could be, there's obviously millions of people that were born on 5th of November 1988, or maybe not millions specifically in New Delhi, but around the globe. So what we're trying to really emphasize here is that personal data is about the context. It's any kind of information which you can use to identify a living individual. And so as an organization who's subject to data protection law, you do need to think quite broadly about the types of data that you collect and handle. And actually it's a key part of any compliance program for organizations to really think and to kind of map the different sources of personal data, the different types of personal data, who you might share that personal data with, what you use it for. If you don't understand, if you don't know the answers to those questions, then it's very hard to demonstrate that you're complying with the law. So what are the key principles that most data protection laws are based on? Well, these derive from the European data protection law. So most people have probably heard of the GDPR that came into effect in May 2018. That was based on the previous European Privacy Directive. Lawfulness, fairness and transparency. So clearly recognizes that the law should control how personal data is used, that people should be treated equally. Everyone has rights in relation to their personal data, and they should have insight into how it's being used. Purpose limitation. That means that when you're a data controller who's collecting and using personal data, you shouldn't use it for purposes beyond those for which you originally collected it. Minimization. That means you shouldn't collect more data than necessary. For example, if you have a contact form on your website that allows people to submit questions to you, is it appropriate to ask them for their date of birth, for their nationality in that contact form, if all you're doing is inviting them to ask questions? Unless those bits of data would influence the response to the question, then probably not. That's probably not data which you need to collect. Accuracy. Data has to be kept accurate. Storage limitation means it shouldn't be kept for longer than necessary. Integrity and confidentiality, or that's sort of longhand way of saying it needs to be kept secure. and the principle of accountability, that the people that handle data are held accountable for their actions in relation to it. So what's the current landscape in the Middle East? We'll just touch on this very briefly before we look at the UAE in more detail. Well, actually, there are quite a number of data protection laws in the GCC and in the wider region now. For quite a long time, the financial free zones have had data protection laws. So the DIFC, although it introduced a new law this summer, it actually had a data protection law since 2004. Although the new law is more developed and goes into more detail and introduces some new requirements. The Qatar Financial Center around the same time also had a data protection law, and the ADGM in Abu Dhabi has had one since 2015. Kuwait has some data protection requirements in its electronic transactions law. Qatar, Bahrain, and Egypt all have national data protection laws. So does Lebanon, which is contained within a part of another law, but it's there. Saudi Arabia has some sector-specific frameworks that include some data protection obligations. Also an e-commerce law, not mentioned on this slide, but recently introduced an e-commerce law which contains data protection obligations. And of course, here in the UAE, we have the new DIFC law. We're also expecting the ADGM to launch a consultation on a revised data protection law very soon. So that will probably take effect in 2021. We don't currently in the UAE have a federal law, but maybe we will do. But the overall picture in the region is one of an increased compliance burden when it comes to personal data issues. A multi-layered approach, which complicates things somewhat if you're doing business onshore and offshore or in various different countries. Because one thing this region isn't in this respect, in contrast to say Europe, is harmonized. So although there are lots of these laws around the region, they're all slightly different in some respect. And you know, the regulator, they're either, for some of the laws there is not a specific data regulator, for others there is, but they're not mandated to work together or to cooperate on enforcement in the way that they are in the European Union. But what we would expect to see as these continue to proliferate is actually an increase in awareness of privacy rights amongst the people who live in the Middle East. Globally, again, it's a similar pattern. So we've listed some territories there where new data protection laws have been introduced relatively recently. As many people probably know, in India there's currently a data protection bill going through the legislative process. So I presume that will pass into law at some point in the not too distant future. And I note that recently there was a Supreme Court decision which reinforced that the individuals have a fundamental right to privacy under the Constitution of India. So what's the situation in the UAE? Well, as I said, it's something of a patchwork. So we have the two financial free zones. They both have data protection laws. Those data protection laws are based on the European style data protection principles. They both require that measures are implemented to protect personal data and to keep it secure. They both operate a system of having a data protection regulator that data controllers need to register with, and they both impose restrictions on the export of data out of those free zones into other territories. The DIFC law, the new 2020 law, introduces a number of GDPR style concepts around accountability and risk assessment. It's probably worth just noting that the DIFC law is now, it's been fully enforced since the 1st of July. The regulator did agree to have a moratorium on enforcement of the law until the 1st of October. So evidently that's finished now. So enforcement actions can occur in the DIFC. And then both of those laws also have breach reporting obligations. So if you suffer a security incident, a loss of data, a data breach, you have to report yourself to the regulator in certain circumstances, and under the DIFC law, you may also have to notify the affected people, so the people who are the subjects of the data that was breached. In the UAE, outside the financial free zones, the position is quite different. There isn't a comprehensive data protection law, although we suspect that one will be introduced at some point, but quite when and quite what it will look like is unknown. But what there are some existing constitutional and criminal laws which do have articles in them which impact on how you use information relating to people. So we'll look at those in a bit more detail later. But it's worth reinforcing that these, in the onshore environment, these are criminal laws, whereas the data protection laws in the free zones are not criminal laws. They're just civil laws. So there's no personal liability in the ADGM or the DIFC for data protection issues, whereas there can be onshore in the UAE. But one trend we're certainly seeing onshore is the use of focused sector-specific laws which deal with the use of information, particularly in the healthcare sector. There have been various developments, but a federal law was issued at the start of last year, which introduced data protection requirements into the healthcare sector, and not just to actual medical services providers, but also to other businesses which would handle patient data. So that would include insurance providers, potentially brokers, potentially suppliers of IT systems if there are hosted services, and other intermediaries. So we would expect that to continue. The trend onshore is certainly to increasingly regulate how data is used, and to afford rights and protections to people. There's no self-reporting requirement in the UAE if there's a breach, although there is a general obligation in the penal code to report a crime if it has occurred. So if a breach occurs as a result of, say, a hacking incident, then that should be reported to the authorities. So what does this really mean for financial free zone accountancy firms? Well, it means lots of things, but fundamentally it means that you need to have an organizational approach to compliance. So you can't, it's broader than just a legal issue. There are some items here on this list which are documentary, so you need to have processes, you need to have policies, and of course there are useful templates that law firms can provide. There are advice that law firms can provide in relation to these things, but there's no point having a policy which doesn't actually reflect how the organization operates in practice. And the legal team in an organization won't necessarily know how the sales team handles customer data, who they share it with, where they get it from. They won't necessarily know how the HR team handles client data, staff data. They won't necessarily know how the marketing team uses staff data. So to go back to that point I made at the start, it's very hard for a business to really engage with the full gamut of compliance obligations if it doesn't actually understand what types of personal data it's receiving and what it's doing with it. Some specific obligations that can occur in the DIFC now are the potential need to appoint a data protection officer and to conduct privacy impact assessments. So those are two of the new requirements in the 2020 law. It's also very important that you actually look beyond the boundaries of your own organization, and that you're aware of which suppliers, which third parties you deal with who handle personal data, and you make sure that there are appropriate contractual commitments in place with those third parties. Data subjects also have a number of rights which they can exercise against the business, so rights to access data. If they've consented to use of data for a particular purpose, they can withdraw that consent at any time. They obviously have a right to make a complaint to the regulator. So it's it's a big expansion of the overall compliance picture, and there's quite a lot to do there. Obviously, it's a risk-based law. Effectively, there are not detailed prescriptive requirements that say you must adopt this particular encryption standard for your email traffic. You must adopt a firewall that meets this particular standard in relation to data which you're storing at rest, for example. But it doesn't operate like that, but it requires you to adopt appropriate measures taking into account the scale of the business, the type of data that you're dealing with, the risk to the individuals. So what happens if something goes wrong? Well, there's a number of things here. I mean, interestingly, most of these are not legal issues in the sense that they're not things which flow as a direct result of a breach of the law. So you may get fined by the Data Protection Commissioner. They might issue a public reprimand, for example, and you could potentially have claims brought against you from the affected subjects of the data. But in all likelihood, actually, the bigger losses might be the ones listed below those 2 points. So there's potential reputational damage if it's a large-scale breach, and I'm sure we can all think of various high-profile breaches that have hit the news over years. There's potential increase in business costs, such as in insurance premiums. Management time will be taken up. There are potential third-party costs, PR, legal, IT consultants potentially. If you're hacked, there can actually be physical damage to hardware. It may be that your hard drives are encrypted through a ransomware attack, and you can't use them again. There's business interruption risk, but crucially, in the financial free zone environment, there's no personal liability under these laws. So liability always falls on the data controller, which is the legal person who's dealing with the personal data, not with individual employees. Contrast that with onshore. So what does this mean for onshore accountancy firms? So the specific compliance obligations are, well, there aren't any really. So all you need to do is ensure that you don't breach relevant parts of the criminal laws, but you don't have to be able to demonstrate that you have policies and processes in place. You don't necessarily have to have sophisticated data mapping. You can by luck not breach any of these laws, but clearly it's advisable to ensure that you do have policies and processes in place to make sure that you don't. We've cited here two particularly relevant provisions of the law. So the Penal Code contains an Article 379, which in my view seems to have been drafted specifically with a sort of professional client relationship in mind. So it says that any person who, by reason of his profession, is entrusted with a secret and discloses it in cases other than permitted by law, or uses it for his own advantage or another person's advantage without consent, has committed a crime. So really what this does is take that professional confidentiality duty and create a crime if that's breached without consent. So we would always advise implementing processes to obtain consent from clients if you are going to be sharing their data with any third party. What we don't have clearly onshore is a regulator who is specifically tasked with looking at this. So if someone was aggrieved, their recourse would be to go to the police effectively and to say, I think this person has shared my secret information without my permission. So in many cases, that's a remote risk. People wouldn't typically want to go to the police over these kind of matters, but it's an option that's open to them, and it is an offence under the Penal Code, potentially, that can lead to a prison sentence. So really serious implications. Similarly, there's a law on combating cybercrimes. Creates various offences, but one that we actually see reported cases on occasionally is the invasion of privacy of a person using information network, electronic system, or IT tool. Where these cases are typically reported is actually usually not in a business context. It's usually where perhaps someone has put a video of a person on Facebook or sent it around by WhatsApp, and it's an embarrassing video in some sense, and they haven't had the person's permission. But this could apply in a business context. If you were carrying out various activities which did gather information on a person without their consent, for example. So as I say, we always recommend in the onshore environment obtaining clear consents from people before gathering and sharing their data.
Ben, if I may ask you one question, if it's like, or should I ask you once the presentation is over?
No, feel free. If it's on this subject, then we may as well pick it up now.
Yeah.
It probably makes sense. Yeah.
So we very well understand that we need to take the consent of members for using their data, right? Even like in our chapter, we have the members' data like email address, phone numbers, and all, and we need to take the consent of theirs. But I just want to take to the other thing like Facebook. So if someone has to become a member of Facebook, will they ask for the consent, or they can write that you have to give that authority if you want to become a member? That kind of authority can be mentioned as a text.
So consent under the latest data protection laws, like the GDPR, like the DIFC law, consent is, as a concept, probably less important than it used to be. So actually, there are a number of lawful grounds on which you can process personal data. So, for example, you can rely on the fact that it's necessary to use an individual's personal data to perform a contract that you've entered into with them. So in that situation, you don't need consent, because actually, if you're complying with your obligations under a contract, it then doesn't make sense for an individual to say, I withdraw my consent, because you can then no longer comply with the contract. So if you think of an employment situation, for example, if you're an employer, it doesn't make any sense for your employee to say that they withdraw consent to you using their personal data, because then you can't pay them, you can't insure them, you can't set them up on the IT system. So consent is best used under those kind of laws for specific activities that are maybe not within the day-to-day activities that you would typically carry out with respect to that person. There are a number of other lawful bases as well. As I say, if we go through them all, we'll be here all night. But something like Facebook, they will have terms of use. They will. I'm not sure exactly what their terms say, but if they were going to share your data with a third party for marketing purposes, for example, they would need consent for that, because that wouldn't fall within one of the other bases that they can rely on with respect to their relationship with the individual.
So my question was like, Facebook can say, if you don't agree, then you cannot be on the Facebook.
Yeah, so they will have, every user will effectively agree to their terms of use. So again, in common with really any website should have some terms of use. Any kind of online platform where you're signing up for a service, you should require the user to accept terms of use for that platform. For Facebook, it's, who actually reads the terms of use? It's got however many billion users. Probably, you can probably individually speak to the ones that have actually read the terms of use. But in theory, there's a contract that's being formed. There are restrictions around intellectual property, around whether you can use it for business use or personal use, depending on the type of user that you are, what you can do with their information, what they can do with your information. That should all be
okay.
Yeah.
Fine.
Okay. Yeah. So we just looked at the what does this mean for onshore accountancy firms, and obviously the legal position is quite different to the financial free zones, but actually the consequences of getting it wrong, other than the potentially significant criminal acts which might occur, actually the business impacts are still very similar. So you could still have a claim from an individual. They could allege, they could bring a civil claim under tort, perhaps, alleging that their data has been misused, but you would still suffer potentially bad publicity, loss of confidence, reputational damage, management time dealing with the breach. All the other things still apply. So something I quite often say to clients is actually what a lot of these data protection laws do is they really codify things which really are good business practice, because data is increasingly important to businesses. It's a valuable asset, and why would you want to keep valuable assets in a disordered or an unstructured way? Why would you not want to protect them properly? Why would you want to risk someone else getting hold of them or misusing them? So really, data protection compliance program is actually good. It's good practice. It's a bit like, if you have a cupboard, if you have a junk cupboard at home, and it fills up with things, then sort of after 6 months, it's a bit of a mess. After a year, it's getting pretty dire, and then after a couple of years, you've got no hope of ever sorting it out. And it's actually a bit like that. Companies collect data over time. Over time, they collect more and more data. If they don't have a sensible process for deleting data that they no longer need, then it will just accumulate and accumulate and accumulate. They'll have increased storage costs. The more data you hold, the bigger the risk if something goes wrong, because there's more to lose. It makes sense to have a spring clean, to have a tidy up, to know what's going on, and that in itself is sort of sensible business risk mitigation. So what might happen next? Obviously, this is mostly speculative, but we think the AGGM will introduce a new law, probably quite similar to GDPR and DIFC. So that will be a development of their current law. We should start to see at some point some enforcement actions under the DIFC data protection law. But I'm not trying to scare people. The regulator in the DIFC is their intention is not to make headlines by issuing big fines. It's to actually inspire businesses to comply with the law and to try and foster that compliant environment, not to raise money or, as I say, to kind of make news. But at some point, some actions will start to get reported. Excuse me. We may see in the DIFC new regulations that actually are focused on specific activities. So in Europe, there are separate regulations which deal with electronic marketing. In the DIFC, there isn't at the moment. It's sort of subsumed within the data protection law, but that might be something where they want to bolster the regulation, and perhaps there might be a specific consent requirement that's introduced. As I mentioned earlier, we would expect the trend onshore in the UAE to include focusing on what are perceived as sort of high value or important sectors when it comes to data. So I think health, consumer affairs, potentially banking, and other financial services. But this should generally increase sort of awareness and interest in privacy rights. Some of those sectors might be subject to data localization requirements. So the healthcare sector now, under that federal law that I mentioned earlier, law number 2 of 2019, they're not allowed to transfer patient data outside the UAE unless they get permission from the local Emirate Health Authority. So that's that's a problem if they currently use a cloud service provider based in another country. That law appears to outlaw that, so they would need to find an alternative solution for hosting their data. And on the back of that, we might actually see that as a stimulus for investment in data centers, in processing facilities in the region. I mean, Microsoft now have cloud facilities in the UAE. Amazon Web Services are in Bahrain. Google is looking to set something up in Qatar. So we may see more investments of that type, and potentially sort of market entrants emerging from local businesses as well, perhaps. And of course, we might see fully fledged national data protection laws in the UAE and possibly in Saudi Arabia. I think it would be a surprise if nothing happened in both of those countries. As I say, we don't know exactly when or quite what it will look like, but it probably will happen at some point. So really, that again, conscious of time, so I'll bring it to a close there. But if anyone has any further questions, then
I can see one raised hand.
But problem is, Jayashree, your audio is not connected.
Mic is not there. Jayashree Ravi.
Ms. Jayashree, you have to type your question, because your audio is not connected.
And there is one question on the chat. It says salaries of DIFC-based employees are calculated by head office back in India. So they have the employee personal information. So will it fall under personal data? If yes, should the company disclose this?
So if those staff are employed in the DIFC, then the DIFC company that's employing them will be a data controller of that data and should be registered with the DIFC Commissioner of Data Protection as a data controller. In terms of what the implications are of processing salary information in India, sometimes within groups you have arrangements where one group is effectively providing a service. One company within the group is providing a service to the other company. So if that's the case, there should be a contract in place that describes that service and ensures that that data which is sent to India is kept secure and is subject to obligations of security.
So a declaration from the Indian company has to be obtained, right?
So you need to have a contract in place between the two companies, and you need to ensure that that transfer to India is compliant, and there are various methods which you can employ to create a compliant transfer. Certain countries are considered to be adequate in terms of data protection law by the DIFC commissioner, so you can transfer data to those countries without needing to implement an additional mechanism to legitimize the transfer. Unfortunately, India isn't on that list yet. Maybe it will be in the future if that data protection bill becomes law, but what the commissioner does at the moment is effectively they copy the adequacy decisions of the European Commission. And so the only countries which they consider adequate are essentially Europe, and then about half a dozen others. So Japan, Uruguay, Canada, where else? New Zealand, and then some of the sort of smaller European territories which aren't necessarily, they're not EU members, but they're considered adequate. So yeah, there's quite a small pool of countries. But yeah, I think scrolling back up to the questions.
Can you pull out the screen? Pull out your PPT.
Yeah, I've done that.
Ah, sorry. Yeah.
Okay.
Yeah, so I think there are no more questions.
No.
And one person has only raised hands. So I think thank you, Ben, for the great insights into the data privacy. Thank you very much for your time. And we will take a separate confirmation from you if we can share these presentations to our members.
Yes, of course.
Yeah. So I would request. Yeah. So I think Jay, are you sharing something?
This is certificate.
Yeah, it's not coming. So.
It's not coming. 1 second. Let me. Yeah,
but in the meantime, I would request our executive member, Ms. Sangeeta Nahar, to please propose formal vote of thanks.
Hello, everybody. Thank you, dear members, for participating in this event. I'm sure all of you are waiting to start your long weekend. A sincere thanks to Mr. Mustafa, a great authority on insurance, to give us a perspective on insurance covering COVID-19, unoccupancy, loss of profits, failure of risk control, cyber crimes, delivery risk, credit risk, director's liability. Thanks to our past chairman, Mr. Bangar, I'm not sure if you're around still, for getting in Mr. Mustafa. We had great pleasure to hear Ben Square, as they would say in finance. Thanks to Mr. Ben Smith for talking to us on beneficial ownership rules and giving us such a lucid explanation on an evolving concept. Mr. Ben Gibson on talking to us on data privacy rules. Anish, thank you for getting them to speak to us. Thanks to our principal sponsors, Danube Group, Tally, Shua, Lulu, our platinum sponsors, Century, Creston Menon, MMGS, IFCO, AGMC, Griff, Clyde & Co, media partners, Khaleej Times, institutional partners, Delhi Private School, and banking partners, Bank of Baroda. Have a great evening, everybody. Enjoy your long weekend. Thank you.
Thank you, Sangeeta, and thank you, everyone. Thank you, all the speakers of the day.
Thank you.
Thank you.
Hey,
Good
if
night.
you can unmute everyone.
So all can unmute themselves as well. We have given the power. And you can unmute now.